Did you want to read this one?
No,
Can't see?
Can't see. I'm having to hold it out, and my arms linked, and my arms, I need to grow them
Your arm's not long enough.
Yep, I need to go to a stretching machine.
Oil prices haven't peaked yet because Chinese demand has yet to return to normal. And so this is very interesting. And this is from the energy minister from key OPEC members of the United Arab Emirates. The UAE is the third largest producer in OPEC and one of the few countries in the world with the capacity to significantly increase crude output, yet it expects supply scarcity to worsen. We're lagging by almost 2.6 million barrels a day, and that's a lot, said a spokesperson. Only Saudi and the UAE have significant volumes of idle production capacity, but even that is not enough to offset the portion of the supply gap created by sanctions on Russia.
Yep.
So this is we're living in a really interesting time here.
And they're saying that the entire energy market has just been reset, and it will be this way for decades to come.
Get that out of my mouth. So Russia's attack on Ukraine is redrawing the world's energy map, ushering in a new era in which the flow of fossil fuels is influenced by geopolitical rivalries as much as supply and demand. Over the past half-century, oil and natural gas have moved with relative freedom to the markets where they commanded the highest prices around the world. That ended abruptly when Russia tanks rumbled across the Ukraine border on February 24th, triggering a barrage of trade sanctions by the U.S. and Europe, targeting Russia that have plunged global commerce into disarray. This week, the European Union agreed to its toughest sanctions yet on Russia, banning imports of its oil and blocking insurers from covering its cargoes of crude. Whatever new order emerges won't be fully clear for years to come. Three likely axes of energy, AXES, influence are emerging. The U.S. and the other Western nations, which have used their massive economic and purchasing power as a political weapon, that's one. China and large emerging nations such as India, Turkey, and Vietnam, that's two, which have rebuffed Western pressure and continue doing business with Russia. And Saudi Arabia and the other Middle Eastern oil-producing nations, which is three, which have sought to maintain neutrality and may stand to gain market share in the years to come. We are in a real hinge of history, said Chaz Freeman, a former U.S. ambassador to Saudi. Europe can never again trust Russia to be its primary energy provider, and that even if sanctions are lifted, countries are proposing costly new infrastructure and endorsing long-term alternative supply contracts that will lock in the new energy map. The new order promises to make the energy trade less efficient and more expensive, potentially putting commodities at the center of the next global economic crisis. A German embargo of Russia crude would likely mean that instead of Russian oil reaching Hamburg in a week or two, it would take several months to travel to China. Conversely, for Middle Eastern oil, the embargo would trigger a longer voyage to Europe for crude that would have ordinarily gone to Asia. Such inefficiencies will drive up costs of shipping, insurance, and financing that underpin the energy trade. Many predict Russia's energy industry, the backbone of its economy, will contract because of the loss of the largest market cannot be completely replaced.
And I think 2 weeks ago we were talking about how Russia's getting around some of the embargoes by having their oil transferred to different tankers,
who lie and say, that came from here, that came from this country.
But what they have done this last week, I noticed, is they started putting sanctions on the insurers for those ships, and that's gonna hurt.
Yep. Russia's days as an energy superpower, it says here in this article, are over. But the new map isn't without risk to American power and the country standing as the guarantor of global trade. Since the end of World War II, the dollar has been the default currency, and this is important. The dollar has been the default currency for oil transactions, which have helped maintain its centrality to the global economy. Now, Saudi Arabia, India, and other developing countries are exploring conducting energy transaction in non-U.S. dollar currencies.
And they've been trying to do that for decades. They wanted to get away from the dollar because it makes them more powerful.
Russia has similarly begun seeking recompense in rubles. Geopolitics and energy have always been linked, and U.S. sanctions against Iran and Venezuela have disrupted global oil flows in recent years. But since the end of the Arab oil embargo of the 70s, the relatively free trades of commodities, backed by U.S. military and financial might, has been a hallmark of the international system. That is now changing. During a speech in April, U.S. Treasury Secretary Janet Yellen said that in the wake of Russia's invasion It was time to redesign Bretton Woods, the system of trade rules adopted in 1944 that prioritized economic efficiency and international cooperation. Ms. Yellen advocated for friend-shoring supply chains of critical raw materials by deepening trade ties with a group of countries that have strong adherence to a set of norms and values. Trade flows are already being redirected as Western energy companies pull out of Russia and shippers, lenders, and insurers refuse to touch Russian exports. The EU, in beginning to implement its embargo on Russian oil exports, which happens June 3rd, joins the U.S., UK, Canada, and Australia. Russian oil exports to the EU, the U.S. and UK, Japan, and South Korea have already fallen by 563,000 barrels a day, or 32% from February to April. A full EU ban would mean some 2.8 million barrels per day of crude and 1.1 million barrels per day of products that normally flow into Europe will have to find a new market. European leaders will find it more difficult to wean themselves off Russian natural gas, which typically accounts for more than 30% of the EU supply and mostly comes via pipeline. The EU has said it would stop using Russian oil and gas by 2027, but ending its reliance on Russian energy could come at a heavy cost. And this is a very important paragraph. But Europe and the U.S. are operating under an additional constraint. Mr. Hochstein said the U.S. won't provide incentives for long-term fossil fuel investments that run counter to its plan to encourage a transition to greener energy sources. So we are kicking our own selves in the head here.
Yep.
We're trying to help Europe stabilize the market and protect U.S. consumers while making Putin pay the price, and do that without cheating our overall goal of reduced fossil fuel usage. EU leaders have said they would now accelerate ambitious plans to build out renewable energy projects as a result of the war, but concede Europe will need more fossil fuels in the interim. So we can be energy independent, and we can refine everything we get out of the ground in this country right now.
Right.
We would not need to be importing from anyone, and we could actually be supplying energy to other needy countries that are allies of ours. But because of our current policies, it can't happen. There are lots of restrictions still on these oil companies in this country, even though he wants them to turn the spigot on, which, that's not really how that works. I've already talked about that before, but it's going to be a long time before we're all driving electric cars.
Yeah, I think it's interesting that we've actually gone to Saudi and asked them to start shipping more to us.
Yes.
And isn't it interesting that we have it right here, but we're crying that we want to be completely green, but we're willing to spend all that time and money and energy, oil being burned in those ships to ship it all back over here. We just need to adjust our timeline just a little bit and say, during this crisis, we need our spigots turned on, help the American public not have
help the energy companies in this country get it all back stood up.
But we can't seem to adjust our stance quick enough.
Middle Eastern producers look poised to be winners in this emerging energy map, and that could have been us.
Yep.
A state-owned energy giant, Saudi Aramco, recently overtook Apple as the world's most valuable company, is already receiving more requests for its crude from buyers in Europe. More broadly, Saudi officials say the war has shown that aggressive targets to reduce carbon emissions by rapidly cutting fossil fuel usage were unrealistic. This is very important, these next two things. The kingdom finds it laughable that last year, several countries, including the United States, have been pressuring them to stick it to plans to zero out carbon emissions. The kingdom finds it laughable that last year several countries, including the United States, have been pressuring them to stick to plans to zero out carbon emissions by 2050, but now are asking them for more oil, said a Saudi official. After rejecting U.S. requests for more production for months, OPEC and its allies agreed Thursday to a bigger-than-expected output increase, allowing Saudi to potentially pump more crude and paving the way for a potential oil-for-security deal with the United States. So, yeah. Russia's new imperative is deepen ties with Asia and especially China to offset the looming loss of its European market. China holds even more negotiating power this go-around due to Russia's desperation to offset European lost revenues. So China's going to have them over a barrel, literally.
That's right.
And they could probably negotiate way cheaper prices just by having a place for it to go. So Russian diplomats are rushing to counter U.S. efforts to deter Russian energy from finding a new home. Russian oil cargoes bound for India, Turkey, China, and other friendly countries increased by more than 1.2 barrels a day from February to April. That's a 146% increase. Losing its nearest and largest market will cost Russia billions of dollars in energy revenues. And it's so fascinating. So this article has a couple of charts. Total global suppliers and buyers of crude oil 2020. So this is a couple of years old, so it's not exactly right. Saudi Arabia is the number one supplier of crude oil in the world. Russia is number 2. Canada is number 3. Iraq is number 4, and we're number 5. China is the top buyer, and we're the 3rd top buyer. And that needs to change. Top suppliers of natural gas, Russia again, and then Norway, which is interesting, and then the U.S. We're number 3 of top suppliers. Top buyers is the EU and the United States, and we're buying it from Canada. So anyways, great article. If you want a copy of any of these articles, just email us at support@rfmoney.com. So, see if there was anything else to cover. Oh, yeah, individual income tax payments were huge first quarter. And so I think I've talked about this or mentioned this, but they're trying to figure out why tax payments, and these are capital gains taxes, were huge first quarter, and they're trying to figure out where the money came from, and it's probably because people started moving out of some sectors of the market fourth quarter of last year.
Right.
And so a lot of our clients had larger tax bills this year than they had before.
Well, I've read, too, that they believe that there was going to be some change in the tax policies in 2023.
Oh,
so they started moving.
Taxing the wealthy people more.
They were trying to cut that off a little bit and save some tax liability. But in the good news on that is that the Social Security surplus will last longer than they had originally anticipated. The reserve fund for the Social Security and Medicare programs will last longer than previously thought, thanks to a faster and stronger than expected money recovery from the 2020 pandemic induced recession. The main Social Security Trust Fund will continue paying out full benefits through 2034, according to the annual report released Thursday from the trustees. That's 1 year later than was previously stated in the 2021 report. Meantime, a key Medicare trust fund could run loan funds by 2028, 2 years later than previously reported. So that's good news. So if you're looking for good news in the news, there you go.
Well, let me close this out. So you've been listening to Randy and Sherri Goss with Rosenberg Financial Group. We have offices in Macon and Warner Robins, and the main thing we do as financial advisors is provide retirement planning advice and manage our clients' investment accounts. If you can't listen live, you can always visit our website, retirerelax.com, and listen to the recordings and check out our special reports. We offer complimentary consultations to help you plan for a successful retirement. I had 2 really fun appointments with prospects this week. Neither of them are going to become clients, but they just had scenarios where they needed some advice.
Right.
And they were so thankful because we don't sell anything. You come and see me, I tell you what we do, and then the rest of the time we talk about what you want to talk about. So in this scenario, it was a caregiver was one of them, and another one was a person that was disabled and unable to work anymore, concerned about her finances. And so you can come and see me, and there's no catch. We're not trying to sell you anything. If you want to come see me a couple of times, you can. So I really love meeting new people, and we meet a lot of really nice people that either see me on Channel 13 or they listen to the show or somebody recommends me. So feel free to call us 478-922-8100 or reach out to us at support@rfmoney.com if you are interested in meeting up. And with that,
have a great weekend.
Securities and investment advisory services offered through Royal Alliance Associates Incorporated. Member FINRA SIPC. Royal Alliance Associates Incorporated is separately owned, and other entities and or marketing names, products, or services referenced here are independent of Royal Alliance Associates Incorporated. The views expressed are not necessarily the opinion of Royal Alliance Associates Incorporated. Investing is subject to risk, including loss of principal invested. No strategy can assure a profit against loss. Rosenberg Financial Group is located at 2517 Moody Road, Warner Robins, Georgia 31088, and can be reached at 478-922-8100.